Hello guys, fair binary options here, and this is Saturday, as you can see, and we are preparing, of course, the trading round for next week. And what a previous week we had, in the sense that the Euro US dollar and the US dollar Japanese yen, they all traveled in, from my point of view, a contracting triangle. And this contracting triangle on the US dollar Japanese yen starts with the highs here in 104.44. Those highs actually are coming after a possible rising wedge, as you can see, over lower degree. So from that moment on, looking on the left side here, I would say that we have a leg of a contracting triangle. Now our contracting triangle starts with the first wave being wave A to the downside of a lower degree, and this should come in the form of a contracting triangle, yet again, that acts as a reversal pattern, and this one should be labeled something like this. So this to be the end of wave A. Now this contracting triangle of a lower degree should travel from A, something like that, A, B, C, D, E. So quite, let's say, difficult to interpret and quite difficult to see, but anyways a valid contracting triangle like this and like this. And whenever you have such a pattern, the thing is that it is being part of a leg of a contracting triangle of a bigger degree. So that would be our wave A out of this degree. Then of course we had the B wave with the spike higher prior to the non-farm payrolls in the United States last week, and then a C wave to the downside. Now this C wave to the downside must be a five-way structure. Why to be a five-way structure? Because you are looking for the retracement of the previous B wave, and the retracement for the previous B wave starting with this moment of time, the end of wave A, until the B wave there, it is A, B, C, as you can see, more than 61.8. That makes our pattern here to be a flat. Now because it is a flat, it needs to move in a three waves here. And then of course with another three waves for the B wave there. And then of course for a flat it needs to have a five-way structure here. Now this five-way structure is mandatory to be an impulsive move. What kind of an impulsive move is this one? Well, this one is an impulsive move that starts from the B waves from the upside, from here like this. It goes here, end of wave 1, the second wave, the third wave, the fourth wave, and then the fifth wave to the upside. And this is being called an impulsive move with a first wave extension. As you can see, the first wave is the longest one. It is extended more than 161.8. And then you look at the other Fibonacci relationships between the third wave and the first wave, the fifth wave and the third wave, and so on and so forth. Nevertheless, this ABC seems to be a triangle again. There is only wave A of a bigger degree and different level. So what to look next? So we have A, B, C. Not only that this is a flat, but this is an elongated flat, in the sense that if you measure the length of the B wave here and you look for the C wave to interpret it in terms of the relationship between wave C and wave B, and if the C wave is bigger than 138.2 or ideally 161.8 when compared with the previous B wave, then this is being called an elongated flat. That is a leg of a contracting triangle. So after the NFP, leg of a contracting triangle done. In a contracting triangle, it is mandatory for price to retrace at least 50% of the previous wave. In our case here, as you can see, if you add some levels here, you are seeing that. Let's try to edit levels and add some level, let's say 80%. Okay, so 80% almost retrace, so more than 61.8, more than that. And take into consideration that this move is channeling too well, I would say that our B wave here is already completed. Therefore, we must be in a C wave type. A C wave type, let me delete the fib from here, because we already know that that is the B wave. The C wave type should go again and retrace quite a lot from the previous wave, and that means price should go, if you take a Fibonacci retracement, this time from here. Okay, the other way around. From here to here, and then we are looking for price to go somewhere like 61.8, 80%. So anyways, into this area before a meaningful bounce for the next leg. So I would say that into this area we are looking for a possible C wave out of this degree. Therefore, what I would really like to do, starting with Monday, is to, if you take a trend line here, as you can see, we have a possible inverse, a possible head and shoulder here. So what I would really like to do, which is a reversal pattern, by the way, of a lower degree, I would like to buy some put options by the time price is breaking this line. So eyes on Monday's open when price is going to break this trend line, ideally. And then I would like to buy put options with end of week expiration date, because most likely price will go something like this, and then for the rest of the week into the CPI on Friday to come something like this. So chances for end of week next week price to be lower than the actual price that we are going to buy are pretty high. Therefore, let's say here buying put options when neckline broken with end of week expiration date. Now, if the neckline is going to be broken on, I don't know, Tuesday, no problem, still end of week expiration date. Thank you very much for being here. This is fairbinaryoptions.com, and all these recommendations are possible due to the help, of course, of our official sponsor, Lion Eye.